Hello everyone, Ryan Ponce with Compass, and today I'm going to talk about the real estate market in general in San Diego, and there's a lot of headlines coming out right now. And is the real estate market bubble bursting? Look, to be honest, I don't think so. The market's definitely slowing down, but in order to have a housing bubble or a market crash, really the market needs to be built on sticks. And I feel like this market actually has a pretty solid foundation. What I will say is that the market was fueled and it went up incredibly fast due to low interest rates and no inventory. And what's happening now is interest rates are rising at incredible rates, and it's causing people to hit the pause button. So it is lowering buyer demand. And now sellers aren't receiving those multiple offers, $100,000 over list price on every listing. It's still happening here or there. We just had a listing that had a bunch of offers on it and went 100,000 over list price. But for the most part, we're seeing some of the listings actually sitting a little while. Sellers are negotiating a little bit, and things are kind of slowing down, which is a welcome sight for some people, especially if you're a buyer in this market. And haven't purchased yet, you're in for some relief in that front. But then on top of that, the interest rates have gone up an incredible amount. So, 4 to 6 months ago, you could have received an interest rate around 3%, and now oftentimes they're hovering around 6%, depending on what type of financing you're doing. So what's happening is buyer demand is slowing down, and we are seeing inventory pick up. So more sellers are hitting the market. The current inventory is not getting absorbed as fast, and the amount of available listings is growing, which again is great if you're a buyer. If you're a seller, you just have to adjust your expectations. To be honest, the rate we were going up before is unhealthy. It's an unhealthy market. It's not really a fun situation to be in unless you're just selling. But if you're selling to buy, you are experiencing both sides of the market, and it's been crazy. So the good news is I expect things to level out a bit, and I don't see values. A lot of the professional outlets, the National Association of Realtors, like all these different sites, Fannie Mae, Freddie Mac, all of these big companies, these professionals, are stating that they still expect values to increase over the next few years. So we might see a pullback a little bit, and we might see buyer demand decrease, but I think we're going to go to a more normal, stabilized market, and I am actually welcoming that change because it has been a very, very unfair market for a lot of people, and now I think that I think things will even out, and it'll just be a more enjoyable atmosphere if you're looking to buy a home. As a seller, it might have been really nice to have multiple offers and get over list price, and the buyers literally would do whatever you wanted. If you wanted a long rent back, if you wanted a short escrow, no contingencies. I mean, buyers were doing crazy things, and it was great if you were a seller. But it's not really a healthy market, and it's not really a fair market. And so really, I'm welcoming the change a little bit. I do think we're going into a healthier market and something that's a lot more balanced and fair. But that being said, when you go to a more balanced market, it is very important to work with a professional who prepares your property correctly, because the way a property shows now has an effect not on just how much money you make, but on the chances on whether or not the property is actually selling. If we go back to a more normalized market, there are homes that sit on the market and then they won't end up selling, and maybe the sellers change their mind or come up with a different situation, maybe where they rent out the property. One thing that I do think is going to happen is once people kind of get used to the idea of new interest rates hovering between around 6%, I think that a lot of those buyers that are currently stepping out of the market right now, I think that they'll come back to the table because rents are insane. In San Diego County, rents have gone up over 20% 1 year on average, and it's really difficult to find a good rental property. There's not a lot being built right now. There are apartments being built, but they're like luxury apartments that are really, really expensive. As far as housing goes, new construction goes, there's still going to be an inventory problem. And then the last thing too is that I don't think that a lot of people are going to start selling their property, even if they think that maybe the market's going to go down. I don't think a lot of people are going to be cashing in on that. I think that people are going to find ways to keep their property, whether it's continue to live there, and even though it might not be a perfect situation, maybe they're looking for a little bit more room or something. But because chances are they have a really low interest rate on their mortgage, the cost of moving is going to be expensive. And then same thing with investment property. Rents have gone up, like I mentioned, over 20% in the last year, and a lot of investors have refinanced into really low interest rates. So if you're holding a property and you have a really low interest rate and rents have gone up, you're making more money off of it, and chances are it makes sense to keep the property for a longer term. And so for that reason, I think we're still going to have an inventory problem. I think that buyers that are currently out of the market are going to re-enter the market in a few months, and things are going to be a little bit more normalized, but they're not going to be crazy like they were a few months ago. So that's my take on the market. I don't think the bubble's bursting. I don't think that the sky is falling. And historically, we are going into a recession, or we're in a recession right now. And historically, real estate has actually done pretty well in recessions, with the exception of 2008. And I think people are still expecting the worst. They're expecting a 2008 situation, but that market was built off bad mortgages, subprime lending, and that's not the case now. So I just really don't see much of a correction. I do think that there will be opportunities for buyers, but I don't think the sky's falling or anything like that. If you have any questions, just give me a call, 619-228-6790. Again, 619-228-6790. My information is in the blog. If you're seeing this on YouTube, there's a link in the description that will take you to the full write-up and my opinion on the market. All right, thanks.